Thank you. Welcome to Czech CPA firm, Satya Ervagaru and Ashlyn Sahini Garu. And we have a Banu Reddy, regional coordinator from Los Angeles, California, as well as Raghuir Reddy, our executive director. So they are all in this meeting Zoom session. I welcome you all. So before starting, I would like to tell briefly about ATA, American Telugu Association. ATA is like a USA-based non-profit organization, which is established 30 years back, and we are doing several programs, both the Telugu community as well as Indian community living in USA and India. So American Telugu Association, the main vision is passion for our culture and compassion for our people. As part of this vision, our current president, Bhuvanesh Bhujala Garu, they came up with a lot of programs, ATA-related programs. So, for example, there is a big list of programs we do year-round. So, I'll give few things what we do. We conduct a lot of free IT trainings for the ATA members, as well as we do have ATA matrimonial services, which can be utilized by ATA members as well as anybody living in USA. And throughout the year, we'll conduct ATA educational training programs. For example, we conduct free training to SAT training, ACT training, and recently we did some kind of robotic training related to how to make a drone. That kind of trainings will be included in ATA educational training. And we started this year ATA free yoga sessions. This will be conducted every Sunday. It's a year-round program, so this is a very useful program. And also shortly next week we are starting ATA spiritual program. That is also a year-round program. So, and also next year in 2020 July, we are conducting our ATA convention. It's a big convention going to happen in Washington, D.C. Please watch your communications in ATA Facebook and ATA YouTube channels about the convention details that will be coming up. And more important thing is, I really like one of the important service we do. It's called ATA Seva services. This is kind of emergency situations. All the Indian community, Telugu community that live in USA, if they come across any emergency services, so we will help through these services. We do have like a free phone number, that is 1-844-ATA-SEVA. Again 1-844-ATA-SEVA. So we do have around 300 ATA members in different positions across the US, and dedicated ATA Seva team around 100 people throughout USA. So I would like to, I request all you to avail these services. And if you want to avail some of the listed services I mentioned, please become ATA member by going to ataworld.org. Again, ataworld.org. So with that, really appreciate Satya Ervagaru, Ashlyn, and Czech CPA firm team coming forward and accepting to present today's presentation, tax information. Thank you. And with that, I would like to invite Banu Reddy Garu. She is going to be moderator for this session. So Banu Reddy Garu, please take over from this point. Thank you.
Thank you so much, Ramakrishna Garu, for a very good intro about ATA. And a very good morning, everyone. Andarki Namaskaram. This is Banu Reddy Tangirala from Los Angeles. I'm the moderator for today's tax planning webinar. Once again, I would like to welcome everyone watching today's tax planning webinar presented by American Telugu Association ATA in association with Chug LLP. So today's webinar can be watched live on ATA YouTube channel, Facebook page, and also on Mana TV, Abrtv, and TV5 International. So as most of you know, Chugg Firm is a full-service law and CPA firm established in 1985 with presence in US and India, having 14 offices and more than 500 employees in both the countries. Their CPA division has very qualified professionals who have expertise in taxes, audits, accounting, entity structuring, and many more. They have offices in California, Georgia, New Jersey, Virginia, and New York. So Chugg Firm has always been very supportive to ATA and all ATA members for their tax needs. So on behalf of American Telugu Association ATA, we would like to thank Chugg LLP for accepting our invitation and presenting today's webinar. So today's session is about tax planning for businesses and individuals for years 2020 and 2021. One of the favorite and very important topics for most of us. And no matter where you are in your financial journey, if you are someone who's just starting out and you maybe just got your job yesterday, so congratulations, some of these tax tips are going to be helpful for you. And if you are someone who has reached the apex of financial opinions, and if you're just looking on how to optimize, we got some tax tips built in for you as well. So another thing that's quite interesting about 2020 is it's a unique year. There's a lot that happened in 2020, and I would say that this 1 year felt like 6 to 7 years for most of us. So many unique things because of the pandemic, because of the special legislation. There's a lot packed into this year. So we want to make sure we equip you with the right tools to know how to maximize your tax savings, as well as the best ways you can structure your income as well. So with no further delay, I would like to introduce today's speakers from Chugg LLP, Satya Erwa and Ashleen Sani. Satya Erwa, Satya is a chartered accountant from India and CPA in US, having 18 years of experience. Satya worked in Reliance Industries Limited, India's largest private sector company, for over a decade, and he has been a partner with Chugg Firm for 6 years. So his specialization is in taxes, audits, accounting, cross-border transactions, M&As. So let's welcome Satya Erwa. Welcome, Satya Garu.
Thank you, Bhanugaru, for your kind introduction. Yes, you are correct. It has 2020 has been a quite action-packed year. For both businesses as well as individuals. So especially from tax point of view and other stimulus packages that was given by government, there are a lot of things in store for the businesses and individuals, which we are going to discuss in detail. Once again, thank you very much, and thank you, ATA, for the opportunity. It's always been our pleasure to be part of ATA and its programs. Thank you.
Thank you so much, Satya Garu, for being with us here. So let me also introduce our next speaker, Ashleen Sani. So Ashleen is a chartered accountant from India and CPA in US. She has 9 years of experience, including 6 years of experience in US taxes, and she was heading a CPA firm in Maryland. Ashleen Sani worked with Hyatt Hotels and managed the taxes and finance areas there. She has been with Chugg Firm for over 2 years, leading the tax term, and her specialization includes US taxes, multi-state taxation, audits, valuations, and non-profits. So let's welcome Ashleen. Welcome, Ashleen.
Thank you, Banu. Thank you, everyone, for having us today. We're glad to share this informative presentation with you and looking forward to today. Thank you, Banu.
Good to have you here, Ashleen. So audience, today we will be focusing on the following topics: updates on PPP loans, the Paycheck Protection Program, and the ERC, which is the Employee Retention Credit. And we'll also talk about the latest updates on Biden stimulus payments, status on Biden's new tax proposal, and as well as the main important topics, tax planning for businesses and individuals. So viewers will be taking up questions on these topics after the presentation from the speakers. So please post your questions in the comment section of ATA YouTube channel and ATA Facebook page. So make sure your questions are very clear, well formatted, and relevant to the topics discussed today. So with that, I would like to move on to the topics. We've been hearing about this Paycheck Protection Program, PPP loans, to provide economic relief to small businesses impacted by COVID-19. So Ashley, can you please educate us on this PPP loan and the loan forgiveness rules?
Absolutely. So, Banu, like you rightly mentioned, 2020 has been a very different kind of year, and PPP loan was the highlight of the year, if I have to put it that way. This loan program is administered by SBA, and all of us must already be aware of the basic rules. But just to touch upon it, the intent of the program was to help businesses stay afloat and to keep as many employees on payroll as they can. Under the original provisions of the CARES Act that came in April of 2020, the Payroll Protection Program offered 100% guaranteed loans to small businesses. Businesses were able to take care of their payroll, rent, mortgage, utilities, and other eligible expenses. I mean, as long as businesses use the money correctly within the laws, they maintain their headcount and wages, they were able to achieve 100% forgiveness. The major changes that happened at the end of the year of 2020, I would say it made all the businesses really, really happy. First of all, any loan amount for 150,000 or less, the PPP program allowed a very simplified application and made things really easy for the businesses. Another change that happened was, initially in the year, there was an EIDL advance that was given to businesses for up to $10,000. And the original law was that out of the PPP loan forgiveness, $10,000 would be removed and you would have to pay that balance back to the bank out of the PPP loan. But with this change, even this EIDL advance is fully forgiven. And the last and the most important part of this December 2020 rules, I would say, is that the expenses that were used to pay the payroll and everything would be deductible under federal tax purposes. Earlier, IRS had clearly said that no double dipping would be allowed and you cannot claim those expenses. But with this change, this is a big deal for businesses and will potentially save tons of money at the tax time. So make sure that all of you are aware of this change. But the state laws have varied. So please consult with your tax advisor to make sure that you know that your state rules are correctly followed. So that's the update on the PPP-1 forgiveness. The second thing that happened in the early 2021 is PPP second draw application. It is going on right now. The deadline for that loan application is March 31st, 2021. Government is talking about extending the program. The major eligibility criteria for PPP second draw is that you need to have at least 25% reduction in your revenue in any quarter of 2020 compared to the same quarter in 2019. So if you have that kind of reduction, you are eligible for this loan. And you need to have the other limit that has been set by the government is that you cannot have more than 300 employees. Also, the other rules have been pretty consistent. The maximum loan amount is the 2.5 times of the average monthly payroll. The other addition in this program was for the accommodation in the food service sector, like restaurants and hotels, they were given 3.5 times their average monthly payroll. But other than that, the forgiveness of this application would be worth seeing, which will start in late spring. The rules are pretty same as long as you're taking care of your payroll, you're doing the eligible expenses, at least 60% on your payroll costs, you would be able to achieve 100% forgiveness. Another change that just very recently happened in early of March 2021, for self-employed filers, people who have single member LLCs or sole proprietors who are reporting their income on Schedule C. Earlier, they would have received PPP on the basis of their net profit of Schedule C. And a lot of times we have seen that, these Schedule C filers, there would be a net loss or a very little income as compared to gross profit after expenses. So now government has made as it possible to elect between gross profit versus net profit. So if you have a higher gross profit, you are eligible to take PPP loan on the basis of the gross profit.
Thank you so much, Ashley. That was quite informative about the PPP loans. So Ashley, another beneficial program for the businesses that came into enactment through CARES Act in 2020. I mean, the Coronavirus Aid Relief and Economic Security Act in 2020 is the Employee Retention Tax Credit, which is ERC. So can you please explain us how this Employee Retention Tax Credit works and who's eligible to get these credits and the latest updates with that?
Absolutely. So yes, along with PPP, another program that was introduced was Employer Retention Credit. And a lot of businesses aren't even aware of this, credit. It was part of CARES Act, but at that time, there was this law that either you can choose a PPP or ERC. But now this rule has been waived off. Businesses can go for both, and it's a big, big benefit. ERC is a fully refundable payroll tax credit where employers could get up to 70% of the qualified wages paid by the employers as a credit in 2021 in their payroll taxes. Eligible employers can get this credit by reducing the employment tax deposits. And if they're not sufficient, they can even get an advance payment from IRS. So, you really have to make sure that businesses are able to use this benefit. The major, condition for claiming this credit is that there should be a decline in gross receipts of about 20%. And that decline you have to consider from any quarter of 2021 to the same quarter in 2019. Only if you were not in the business in 2019, then you can compare to the same quarter in 2020. Another thing is, which is a very good news, that earlier this ERC was only up till June 30th of 2021. But with the new plan, Biden's plan in March 20, a couple of weeks ago, we now the whole year of 2021 is eligible for ERC. And it is a great, great benefit. I would advise all the businesses, if they're eligible and they fall under this criteria, that please, go ahead and take care of this employee retention credit. The another thing that we need to make sure is, if you have taken PPP second draw in 2021, then the wages that have been paid by PPP loan, you cannot use ERC on those wages. So you have quarter 2, quarter 3, quarter 4, like whatever wages have not been paid by PPP, make sure that you check on the ERC rules.
Thank you so much, Ashleen. And now talking about the stimulus plan, there are a lot of federal programs that came out in 2020. And one of them is that most of the Americans received a stimulus check as an opportunity to bridge the gap and recover from the shutdown and the crisis happened earlier. So it's not a cut and dry exactly who received that. Should I receive the check or not? So there's a lot of confusion. So Ashleen, can you explain us who's eligible to receive these stimulus checks and what are the timelines to apply and any updates on the latest stimulus plan?
Absolutely. So government has launched till now the 3 stimulus payments. The first one was in April of 2020, which was a $1,200 per person and $500 for dependents. The second stimulus payment that went out in December and early Jan was $600 per person, whoever you've claimed on your tax return. And the latest one that has been introduced by government is the $1,400 stimulus check. And that has already started going out to tons of Americans from last week, I think so. And IRS has a very good tool to even track your payment. You can go online and you can check whether you have received that payment or whether you're eligible for that payment. Also adult dependents as well as children, everyone is receiving the same amount of stimulus payment, because earlier dependents were getting $500 payments. But now every person on your tax return, you will get $1,400 per person. The only thing we have to make sure is that it will start phasing out at an income of $160,000 for married filing joint. And for single filers, over 80,000, it will phase out. So we have to make sure that our income limits is within that. IRS will consider either the tax return 2019 or 2020, whichever is the latest one they have on file for you. So if they have 2020 on file for you, you can, they can pick up 2020 and determine the stimulus payment for you. If not, they'll decide on 2019. Another thing to note is, for example, if your 2020 income has reduced and IRS has given you, and your 2019 income was higher, right? And IRS, either they did not give you stimulus payment or they gave you reduced stimulus payments. In your tax return of 2020, you can claim a recovery rebate, which will be on the basis of your 2020 income. So make sure when you're filing your taxes for 2020, you convey to your tax advisor that you're providing the amount of stimulus payments you received, because you might be eligible for the difference amount as well. So that's the one thing. Another thing that came with the stimulus plan was child tax credit. So for child tax credit, we all know we have been getting a $2,000 per child on our tax return, and up to $1,400 of that amount is a refundable child tax credit, which is additional child tax credit. But the American Rescue Plan that came in March, early this month, they will give temporarily more credits to the families. Credits will increase from $2,000 to $3,600 per child if they're under 6, and $3,000 for children older than 6. And the best part is this credit would be fully refundable. So half of that amount will be paid through your tax return, and the other half will be paid in installments from July to December. Again, there is an income phase out limit. It will start phasing out at $75,000 for single filers and $150,000 for married filers. So that's for child tax credit. And the third one is the unemployment supplement. People who have lost their jobs, they would receive additional $300 in addition to the state unemployment. They will receive this pandemic unemployment. Also, up to $10,000 of unemployment income they have received, that would be tax exempt. So that's the update on the Biden stimulus plan.
Thank you so much, Ashlyn. That was a very useful information for all the audience viewing too, because there was a bit of confusion in the community. Let's say my 2018 and 2019 income was higher than what's the amount allowed, and let's say I got hit too much in 2020 because of the pandemic. Like most of the small business owners went through this phase, so they were confused. Will I be eligible to get this stimulus check or not? And you clarified all the doubts here. Thank you so much, Ashlyn. Now let's moving on to the new tax bill. So there's a proposed tax bill that may happen soon. So we wanted to get some details about that new proposed tax plan. So what are all the changes that we can expect with this new tax plan, and how does this proposed tax bill affect us as an individual and also as an entrepreneur? And what's the status? When is this going to, become effective? So can you explain us all these details, Ashlyn?
Absolutely. So Biden's new tax proposal, and I feel this is what people have been waiting for. The whole of election campaign, Biden was talking about how he is going to tax higher income bracket taxpayers, and how he's going to make for lower or average American taxpayers, the tax bill would be slightly lower than last year's. So, there has been few interesting changes that he has mentioned in his, tax bill. For individuals, I would start with individuals. First, he's definitely, going to raise taxes on individual with income above 400,000, including income taxes, capital gains, payroll tax. To be specific, he's raising the higher tax slab from 37% to 39.6%, which is basically the Tax Cut Act, which was introduced by Trump. So he's going to bring it back to the 39.6%. Also, there will be an additional Social Security payroll tax for 12.4% for again wages over 400,000. So these are the two major changes on the income side for the individuals. Then coming to capital gains, he's planning to tax the capital gains at ordinary income rates, especially if the income exceeds $1 million. Right now, the top capital gain rate is 20%, and which could be a huge impact because especially if you fall under under those income brackets, your tax is going to be double on that capital gain. Also, he's talking about phasing out the qualified business income deduction, which pass-through entities are receiving, which is the 20% deduction on the K1 income. He's talking about phasing out for, again, filers with taxable income over 400,000. Another thing changes for individuals is for the estate taxes. The bill talks about expanding this tax by reducing the exemption amount, but increasing the top rate to 45%. Currently, all the, I would say, heirs of wealthy Americans, or if you pass through, especially, if someone passes away and they pass on the properties to their children and, to their families, you receive a step-up basis in their cost, and which minimizes a lot of tax liability. This tax bill talks about paying taxes on that unrealized gain. So these are some of the changes that individuals will impact, but majorly it is for higher income brackets. A lower income would not see a lot of difference. Coming to the businesses, the major change, I think the corporations, the major benefit that they got with TCJA Act is a 21% corporate rate directly from 35%, which was a huge reduction. So Biden talks about taking it to 28%, somewhere in the middle. So, this bill talks about raising the corporate income tax rate. Also, it talks about establishing a minimum tax for the corporations with book income of over $100 million. And then there's also a proposal for 10% surtax on like an additional tax on imports from offshore business activities. And he's planning to introduce a 10% made in America tax credit to incentivize onshoring. These are some of the changes that we see that will impact, again, majorly higher income level. Not a lot of changes for lower income or average Americans. That's about it. Thank you.
Thank you, Ashleen. That was a lot of information. And now coming to the main topic, the tax planning strategies for businesses. So Satya, there are a lot of business owners in our Indian community, and I know many of them are watching today's webinar. And there are a lot of strategies the business owners can adapt while doing their tax planning. So, and most of us, we just passed the deadline for business tax filing, which is March 15th, but there may be quite a few who must have applied for extension. So Satya, can you educate our viewers on some of these tax planning strategies, especially for businesses?
Yeah, sure, Banagaru. So before going into the details of tax planning strategies for businesses, so any tax planning is on case-to-case basis. So some of the tax planning strategies not applicable for some businesses, some are applicable for some businesses. So we need to look into each business separately and then strategize. Having said that, there are some common areas where businesses will get benefit if they do proper planning in advance. So we'll discuss few of them now, and then if there are any specific questions, then we can address that separately. So any tax planning for business, it starts with the right structuring of the entity. So I would suggest before looking into any other aspects of it, we need to look into whether your business entity type is proper or not. From both legal point of view as well as tax point of view. So on broad level, there are three kinds of entity types that are available in US. I'm discussing only few of the entity types, not going into the details. So there is one type, a limited liability company, and then S corporation, C corporation. So depending on the type of the entity, type of the business that you are into, you need to decide whether your entity is eligible. So just 1 second, please. I'm sorry, my lights off. So depending on the type of the business that you are into, you need to decide whether you need to set up as an LLC or S corporation or C corporation. So to give few examples, LLC is mostly recommended when you don't have the employees, and when you invest in some kind of a passive activity, like for example real estate. Real estate is the best example where you can set up an LLC, and the advantages of limited liability, you will have it, and you can claim expenses, and that gives the most tax advantage benefit. And for some of the companies where they have employees, and where the business growth you see in future is more prominent, then S corporation is one of the other preferred structure. So S corporation, the main advantage is there is no double taxation. So there is no taxation at the entity level. Only individual has to pay tax. So S corporation is preferred for the IT companies, typical IT companies, where they have few employees, and then this gives the most favorable tax advantage structure. And few of our clients ask us when do we need to go for a C corporation, and most of you know that C corporation has double taxation. So you have to pay tax at the entity level, and then again you have to pay tax when you take out the money from the entity. So certainly C corporation is not recommended from tax point of view, but there are certain circumstances where you can elect a C corporation. If you see your business, if you want to, if your plan is to sell your business after a few years, and then at the time you want to save some capital gains taxes, certainly C corporation is recommended. You have to plan it advance. There is something called qualified small business stock plan, where your business has lesser than $50 million of assets. Your entire capital gains tax is exempted when you sell off the business. So this is one area a lot of business people are not aware of. But if any of business community or business owners, if you have plans of selling the business, think ahead and think about converting it to C corp to gain tax advantage in terms of capital gains. So these are the main kind of a broad level entity types and the advantages and disadvantages. But of course, we need to discuss in detail if someone is really wanted advice on what kind of entity structure they wanted to follow. So the again, as I mentioned, S corporation is one of the favorite tax entity type for most of the business people, if they are into IT businesses or any other business where they have employees. The main advantage of having an S corporation, in addition to single taxation, self-employment taxes, certainly businesses will get advantage in reducing their self-employment taxes when they opt for S corporation. And the other major issue that we see among our clients or among the business community is their multi-state taxation planning. So basically, a lot of IT business, I'll give you an example of IT business only. A lot of IT businesses has end clients and their employees located in different states. But what happens is, some businesses, they ended up paying taxes in the state where they incorporated. So for example, if any of the business is incorporated in California or New York where the taxes are higher, so the entire income is allocated to that state, and then you ended up paying higher taxes. But that's not required. You have to allocate to the states where your employees and your clients are located. That way you can distribute your income tax among various states instead of paying the state tax in the state where you incorporated. This is one of the common area where a lot of business owners ended up paying a lot of taxes. So this is something anyone can plan out in advance. And then the other important thing is R&D credits. So most of the IT companies, if they are purely into staffing or consulting businesses, probably this is not applicable. But if any of the company is into R&D, then certainly there are a lot of tax credits that are available at federal level as well as state level. And some states, they have refundable tax credits also. So if any of your, any small portion of your business has R&D activity, certainly you can think of taking the advantage of by claiming R&D tax credit, both at federal and state level. So these are the few, and then next slide, please. And a few other tips. Again, this is again depending on the business to business if they want to use these options. So cash versus accrual. Some of the businesses follow cash basis accounting for reporting their taxes, and some accrual basis accounting. Certainly, you can plan your taxes by switching from cash to accrual or accrual to cash. Any business with revenues exceeding 25 million, they have to go with a accrual basis. There is no option of cash basis for them. But if the business has less than $25 million of revenues, you can switch between cash or accrual, but kind of not regular, one-time switch to get a most advantageous position from tax point of view. And then another topic is about offshore entity setup. Again, I'm giving the example of IT businesses, as I know our community, most of them into IT business only. So these IT businesses have offshore entity in India where they do marketing services, and sometimes what we see is the transfer pricing agreement is not in place, and then the amounts that you transfer from US to India company, you have to do it in such a way that you will get advantage in both India law as per India tax laws and as per US tax laws, while following the transfer pricing regulations of both the countries. So I would recommend to have a proper setup of offshore entity in India as well, and a proper kind of structure that we need to follow. And at the same time, the ownership of the India entities. So what we see from among our clients is the ownership of India entities is altogether separate from US entity ownership. To the certain extent, it is okay, but if you wanted to have advantage in terms of immigration, or if you want to move any of your employees from India to US, so certainly having parent subsidiary relationship is advantageous. Having US entity as the parent or India entity as the parent, it's up to you, but establishing the relationship between the two entities would give a lot of advantages from immigration point of view, from fund transfer point of view, so that the profits that you have in US entity, you can transfer it to India entity and vice versa. So this is where another planning strategy that any of the business owners would want to follow. And then there are other few things, not material, but small category strategies. You can buy a vehicle in the business, and you can take an accelerated depreciation in the year of purchase. So depending on the size of the vehicle, you will get 100% of the cost of the vehicle as a deduction. So if in certain year, if you have a huge profits, then certainly you can consider buying the vehicle in the business name and take a tax advantage by claiming depreciation for the entire cost of the vehicle. And another strategy is for small businesses, again, if you have a self-employed business or some LLC as a corporation where you are the owner, then you can plan of hiring your kids or your family members as an employee, and you do the payroll processing so that you can get the deduction in your business, and probably that amount is not taxable in the recipient's hands because of standard deductions. So again, this we need to look into each specific business, and if that is applicable, this is one of the area that any business owner would want to look into. And then investment in real estate. Certainly any business who has huge profits can look into investing in real estates, either through the company or setting it up separate LLCs. Because in any investment in the real estate, you can get an accelerated depreciation, and mostly whatever the revenue that you get from the investment, there is no need to pay tax because of the depreciation deduction that that an investment gets. So these are the broad level tax planning strategies for the businesses. But again, as I said, there are a lot of other areas one can look into it depending on the nature of the business they are into, which I'm happy to answer later if they have any Q&As.
Thank you, Satya Garu. Those were a lot of valuable planning strategies for business owners. I hope all the business owners watching today's webinar will take advantage of these strategies and will take some takeaways from your presentation. So, Satya Garu, now coming to tax planning strategies for individuals. The tax filing due date is almost on us on April 15th. So what are some of the suggestions or the strategies that you can give for the individuals while they're filing their taxes to save their tax money?
Yeah, sure, Banagar. So before going into the topics, one good news probably a lot of our attendees must be aware about. So the tax return filing due date of individuals has been extended by a month. So you can file the tax return before May 17th now. And it's not only about the tax return filing and tax payments also. You can defer it by a month. So on that positive note, we can discuss some tax planning opportunities for individuals as well. So as you know, most of W2 income employees, they don't have much of the tax planning strategies we can refer to, but there are few areas one can consider into if they are not availing those already. So one of the item is 401k contributions. I think most of the attendees probably must be aware about. Every individual has a deductible 401k contribution amount of 19,500. So straight away they can get the tax deduction by contributing this to 401k. So if any of you or if your employers doesn't have 401k, probably you can talk to them, or you can contribute it to 401k, so that this straight away deduction or the benefit that one can get. And then there is something called traditional IRA or Roth IRA. So any individual can contribute up to $6,000. Again, the amount of deduction will be phased out depending on the income levels of the individual. But this is one of the area or one of the deduction or contribution that one can do and get a tax advantage. And for self-employed individuals, there is something called solo 401k plans. Again, in a self-employed individual, they are both employee and employer, so they can get a deduction from employee point of view. Again, the same limit of 90,500 is applicable, and they can contribute up to 25% of the compensation as an employer contribution, and they can get that deduction as well. So this is kind of a double advantage, and they can get the deduction up to maximum of $57,000 depending on the W2 of the employee or the owner. And then there is something called a SEP IRA. This is again for self-employed individuals. You can contribute up to 25% of the compensation or $57,000 amount, up to $57,000. So if anyone has higher incomes, then these are the solo 401k or SEP contributions are the ones one can look into it and take advantage of it. And HSA contribution, again, probably there is no need to explain in detail. Any individual can contribute up to $3,600 and can get a tax deduction. And 529 plans, though 529 plans, probably most of the attendees must be aware, you can contribute to education plan depending on the state or universities which offers these plans. You can get the deduction, but this deduction is not at a federal level, but a lot of states offer 529 deductions. So this is one of the area that probably if someone is not utilizing it, you can start contributing it and take some tax advantage. So we'll go to next slide. So yeah, there are a few other things. I'll go to backdoor IRA later. But for some of the small businesses, you can take home office expenses as a deduction. So if you are working from home and use some part of home as for office purposes, you can take mortgage payments, rents, or utilities, or phone, everything to that extent that's allocatable to business, you can take the deduction. And vehicle expenses, again, if you use your personal vehicle to business, you can take the mileage. I think depending on the IRS rates, probably for each mileage you can get 50 cents as a deduction. So home office expenses and vehicle expenses, regular common type of deductions that most of the self-employed businesses can use. And if any of you are not using that, probably you can consider taking these deductions. And charitable contribution, there are a lot of changes last year in charitable contributions. Till last year, before this CARES Act, any charitable contribution an individual makes, you get itemized deductions. So if your itemized deductions are more than standard deduction, then only you will get the contributions as a deduction. But CARES Act allows every individual to take that $300 of cash donations as a deduction, even if you don't have itemized deductions eligibility. So this is one thing probably most of us must have contributed some or the other amount in 2022 non-profit organization. So this is the amount that you can take a deduction straight away from your adjusted gross income, and you can get tax advantage of this. And then for some qualified charities, if you contribute any amount in 2020, you can take a deduction of up to 100% of your adjusted gross income as a charitable deduction. This is one of the change that was incorporated under CARES Act. And then there is something called economic zone reinvestment. Basically, if you sell a property and if you have a capital gains, you can defer your capital gains taxes if you reinvest this amount in a specified zones that are prescribed by IRS. So this is one area where anyone has huge capital gains taxes. Then this is one area one can look into it and see if you have any economic zone that you can invest into and get a deferral of capital gains taxes. And then there is something called backdoor IRA. Just to give a brief idea about it, so Roth IRA, any individual cannot contribute to Roth IRA if their income exceeds certain limits. So that they will not be able to take advantage of Roth IRA. To mitigate this, this backdoor IRA concept was followed by a lot of people, where one can contribute into traditional IRA and then convert it to Roth IRA. So again, there are some complexities involved in it, and this needs a detailed discussion. If any of the attendees have any questions, I'm happy to answer. But on broad level basis, these are the few tax planning strategies for individuals.
Thank you, Satya Garu. That's a very good information for all the individuals to plan and prepare themselves for their tax filing. So audience, we're opening up for Q&A session now, and I will be presenting your tax questions to our experts, on your behalf. So please post your questions in the ATA YouTube channel and the Facebook page. I'll be picking up the questions from there. And please make sure the questions are short, clear, and crisp, and more relevant to the topics that we discussed today. And while you post your questions, I want to make a small announcement. So American Telugu Association, ATA, is always ahead to educate and enrich our community. ATA is planning a string of seminars, webinars, and events that helps Indian community in the USA, especially the Telugu community. So please stay tuned for ATA emails, social media to catch up with upcoming events. So most importantly, if you are an ATA member, you can enjoy more interesting benefits. We all do yoga at home and eventually go to LA Fitness to stay fit. So ATA membership offers free virtual yoga sessions and discounted LA Fitness membership for the entire family. And you also get to apply for youth scholarships, and we have discounted airport custom-free products and many, many more. All these benefits for lifetime with a very nominal fee. So please take advantage of these benefits, become an ATA member, and join our ATA family. So visit ATA website at ataworld.org to get the membership. So now I'll be taking the questions for the tax experts from our YouTube channel and the Facebook page. So, so to Satya Garu and Ashley, there are quite a few questions that audience would like to check with you guys. So I'll pick up as many questions as possible. So one of the question, so this is from Dhanvantri Jalagam. I'm on H-1B visa, got married in November 2020, and my wife arrived in February 2021 on H-4 visa. My question is, do I need to file the taxes as single or married filing jointly for the year 2020? Satya Garu,
yeah, I will take the question. Tax in US, it is depending on the tax residency rules. So yes, so the attendee's wife, she's not a tax resident. She was not a tax resident in 2020. He has to file single tax return. He cannot file married filing jointly.
And Satya Garu, there's another question from Arvind. I was on H-1B, but now moved to India. What is the long-term capital gains tax for people living outside USA without green card or citizenship?
So I think we need more details regarding this. If the property is situated in US, so irrespective of where the person lives, they have to pay capital gains taxes in US. I think the question is not clear whether the property is located in India or US. So yeah, depending on that, his capital gains tax situation will arise.
Okay, and another question from Venkata Siddha. 2020 income is less than 150K if we file taxes, which is not yet processed. Are we eligible for third stimulus now? Income in 2019 is greater than 175K.
Yes, I will take that question. Yes, so the advice would be to file your taxes at the earliest, and the stimulus will go out throughout the year. Also, there's an IRS tool available. You can go online and fill in your information, and you will receive the stimulus check. So the best suggestion would be to go and file your taxes at the earliest.
Okay, and there's another question from G1. Is the tax filing for states also extended by a month?
Not many of the state confirmed as of now, but expecting that even states are going to confirm with the federal extension. But for sure, Texas has granted extension till I think May 15th or so. I believe it is July 15th. But other states, we need to wait for the regulations.
Okay, we have another question from Ishwar K. How to file crypto taxes? I didn't receive 1099 for crypto transactions.
So yes, so make sure you have a schedule available where sales and purchase details are provided correctly. So you have to report any gain on sale, long term or short term. You have to report that on your tax return. So make sure when you provide that information to your tax advisor, you give this information as well.
Okay, thank you, Ashleen. And there's another question from someone named Balusu. Can you talk about children custodial Roth IRA?
So this specific question, Banagar, there are certain things that we need to look into it in detail. If they can send an email, we can provide the details in detail.
Absolutely.
So, so we can display our email details. So if anyone has specific questions, certainly we can address.
Yes, absolutely. There are some questions that might be too individualized. So in that case, you can reach out to Chug LLC, Satya and Ashleen from there, and they can answer your questions. And another question from Ram Mohan Varanasi. I have withdrawn 401k last year from my previous employer account completely. Can we get any exemption on the tax? I received 1099-R with IRS code 1.
So if it is a 401k withdrawal, so in under CARES Act, I think probably everyone knows, there is a penalty waiver. There is no penalty of 10% when you withdraw 401k amount up to $100,000, but there is no exemption on tax. You have to pay tax on this.
Okay. And there's another question from Karuna K. Is W2 or 1099 both will be the same as per employer prospect, or which is advisable?
This needs a detailed discussion. So this is more as per labor laws of the state. So most of the labor laws in the states, they prescribe certain rules whether an employee has to be on W2 or 1099. It is not a choice for us. It is as per the laws. We need to follow the rules and regulations of the labor laws of the each state. So mostly most of the states, what they prescribe is if an employee works 9 to 5 and if they are under supervision of the employer, and you have to obey the instructions of the employer, then it is in the nature of the employment and you have to be on W2. But if you are as a consultant working few hours for the employer, and then you can work for any other employer separately in your free time, and you are not under the direct supervision of the employer, then you have to be on you can be on 1099. So this is not a employer or employee choice. This you need to see the labor laws and then decide.
And then the other question from Ashish Shirsagar. For individual working from home during pandemic, how to take mortgage deductions?
Okay, so I think question is whether they can take mortgage deductions on his individual tax return or not. Yes, of course, one can take mortgage deductions. Again, so probably the question is if they get 1099, then you can take certain percentage of the mortgage payments or house expenses as a deduction from your Schedule C. Or if you are a W2 employee, then it is Schedule A deduction only. You need to, if your Schedule A deductions are more than 24,000, then you'll get the mortgage deduction, or otherwise you'll not get it. So it all depending on whether you are a W2 employee or 1099 using Schedule C.
So audience, so as we already mentioned, we opened up for Q&A session. Please post your questions in ARTA YouTube channel as well as ARTA Facebook page. I will be presenting the questions to our speakers, the tax experts on your behalf. And another question from Singham PR. May I know if profits from cryptos can be squared off with losses from stocks, either short term or long term?
The answer is yes. So cryptocurrencies follows the same rules of stocks only. There are no separate regulations as of now that are applicable for cryptos.
And another question from Venkat Gade. Can you provide details about filing tax for parents from India?
Again, so if anyone post a question, it has to be detailed. So we need to know the status of the parents, whether they are green card holders or not, or just a business visa, or if they have any income here in US or not. So it depending on a lot of factors.
So
Yeah,
Banu, I
think
would recommend if any situational answers or any answers so far we have given, if you haven't received a satisfactory response, that means maybe your situation is a little different. Feel free to reach out to us, and we can look into that specific situation.
Definitely. So audience, there might be some questions which are very, very personalized. So depending on your situation, Satya and Ashley, they can answer your questions. If you send an email to info@artaworld.org, we'll forward your questions to the speakers and we'll get answers for those questions. So there's another question from Aravind. How are the withdrawals from 401k taxed in USA for individuals who moved to India without green card or citizenship? Is standard deduction applicable?
So again, tax residency rules are applicable. This is again specific question. We need to look into the number of days that they are present in US and see whether he is required to file 1040 or 1040 NR, and then only we can answer that in detail.
Yes. Thank you, Satya Garu. And we suggest all the audience, if you need detailed answers, please send email to info@ataworld.org, and we'll be forwarding your questions to our CPAs, tax experts, and we'll get answers for them. And there's another question from mail to LAT. Are margin account taxes from brokerage be deductible? Margin account taxes from brokerage be deductible?
Yes, it's deductible.
Okay. And Nara CH, the question is, can you still withdraw from 401k penalty free for 2021?
For 2021, no. So any 401k withdrawals that anyone did in 2020 till December 31st, 2020 were penalty free, but that was not extended in 2021. But in the latest act, if at all the 401k withdrawal or the person that withdraws 401k lives in some specified zones which are categorized as a disaster zones, then still you can withdraw without any penalty. But I think there are very few areas which are declared as a disaster zone. So I think most of the areas are not declared. So there won't be any penalty free withdrawals now.
And a question from Ishwar K. He's asking, can you please provide your contact details? I need to file crypto returns for the year 2019 and 2020. So Ishwar Garu, if you need the contact details, please send us an email at info@ataworld.org, and we'll send you all the requested information. And another question from Lokesh Reddy. I have invested in a real estate company by forming LLC. The investment is passive investment on a bigger LLC. They have given K1 for me. Can I deduct any other LLC expenses against the LLC K1?
Yes, you can deduct. To give it a short answer, any business expenses that are genuine and you incur to create that income, certainly you can take the deduction in your LLC, even though if you get a K1 from other LLC.
So Lokesh Garu, hope you got the answer for your question. And moving on, next question is from Teja Reddy Bogula. So recently I applied for my tax returns. Unfortunately, the taxpayer applied for 1040 instead of 1040 NR. My living in USA is below 5 years. I have received stimulus check recently. Will there be any problem?
So it's better to return it. Certainly, we see a few of the individuals who gets the stimulus payment by mistake. We suggest to recommend them to return it.
Okay, so hope Teja Reddy, you got the answer for your question. And there are a few other questions that are coming in other channels. So Satya and Ashley, someone's asking, I'm self-employed. Can I get a PPP loan? And what is my PPP eligibility?
So yes, you can apply for a PPP loan as long as, so you compare your gross receipts. If they have a 25% reduction, and if you took PPP 1, then you need to make sure that you follow that revenue reduction rule. You meet that 25% reduction. If you did not take PPP 1, then no need to look for any revenue reduction. You can definitely apply, but we would suggest to apply as soon as possible, because some banks have already closed up. Some banks are closing maybe this week. I mean, this week has ended, but this week or next week. So apply as soon as possible. Your Schedule C. If you haven't filed your 2020 tax return, then you can prepare a Schedule C and sign it and give it to your banker. If you're you have the option to use 2019 or 2020 Schedule C, and that would help you in calculating the PPP loan.
Okay, another question from Ravinder Ramidi. Am I eligible to get third stimulus check for the dependents with ITIN?
No, I believe so. No, not with ITI, and you need to have a social security number.
Okay. Thank you, Ashleen. Hope Ravindra Garu, you got the answer to your question. There's another question from Venkat Gade. I think this question was put to the speakers before, but Venkat Gade, he's asking, my parents have GC and they are below IRS limit to file the tax. Even if they're below filing limits, should I still file the tax for my parents as individuals and not as dependents?
Okay, yeah. So certainly you can file. So most of the cases, so the filing requirement of the parents, it's required when they wanted to use Medicare benefits. So even they are within the certain threshold limits, but still, if you wanted to take Medicare benefits, it's recommended to file it.
Thank you. Thank you for the answer, Satya. So Venkat Garu, I hope you got the answer for your question. And another question from a different channel. So can my business apply for both ERC and PPP?
Yes, you are eligible for both with the Consolidations Act that came in December 2020. Government has made it very clear that you can apply for both the PPP loan and ERC. The only rule that we have to keep in mind is that whatever payroll was paid by the PPP loan, you cannot you claim ERC on those wages. Other than that, you're good to go. The whole of 2021 is eligible for ERC. Just compare, if you already have a PPP second draw loan, just make sure you use it in the best way you can in the first quarter, and then the rest of the quarters you can figure out for ERC. Just you cannot have both in the same for the same period, I would say. This has to be specifically analyzed.
Okay. And how does the $3,000 child tax credit work as per the new stimulus package?
So that will be applicable if you're filing your taxes. So if you fall under the certain income limits, as I've mentioned before, then it will be given to you. Like I said, if your income limits are low and say, for example, you are eligible for a refund, then you'll get it as a full refund, 50% with your tax return and remaining in from July to December.
Okay, and we have another question. My tax was deducted in one state, but I work from another state due to COVID. Which state taxes do I need to pay now?
So there are two things when we file state taxes. So one, obviously, wherever employers have withheld your taxes, and one is your resident state. So you have to file tax return for both. It's just that if you're residing in one state, you'll file a resident state tax return, and for the other state, you'll file a non-resident return. And usually, you'll get a tax credit paid to other states in the resident state.
Thank you. And another, I think, a diplomatic question. Elon Musk moved from California to Texas, citing higher taxes. Do you recommend moving my business to other low state taxes?
So this is one of the common questions that we get from a lot of our business clients, Bhanagar. So basically, of course, there are some states where there are no personal income taxes, but all of the states have income taxes, whether in the form of tax on the net income or gross income. Even Texas also, though there are no personal taxes, but business has to pay taxes on the revenues if their revenues exceeds on the gross revenues if it exceeds $1 million. So what I would recommend in those cases is if the business has more employees and your costs are going to be higher, then certainly it's recommended to move to some other states where there are no personal taxes or lesser personal taxes. So we see a trend recently. A lot of California businesses and New York businesses are moving to Florida and Texas. certainly, but that's to we recommend not just for the sake of moving it, but if you have employees and then if you want to save some costs on employees, then certainly you can go ahead and move. But otherwise, just moving from one state to another state, it doesn't necessarily give you tax advantage, because finally at the end of the day you have to pay state taxes depending on the income allocation to each state wherever you're located.
Okay. I'm investing in real estate. Do you recommend incorporating LLC for it?
Yes, certainly. Yeah, all real estate investments we recommend to incorporate LLC, not on individual capacity. Mainly, the first thing that anyone would look into it is legal protection. So then only the tax and other things. So LLC certainly gives limited liability protection, and for real estate investment, that is the ideal entity that one can want to incorporate.
Okay. And I have different businesses. Can I operate under the same company?
Yes, certainly. You can operate different businesses under the same entity, but again, from legal liability point of view, it is always recommended to have different entities for different businesses. That will protect your business. Basically, in one business, if you have a huge lawsuit filed by your tenant or employee, then you should not suffer because of one business as an individual or other businesses also. So in order to protect you from the liabilities, one should we recommend to incorporate different entities for different businesses.
Thank you, Satya Garu. And another question, my IT company has an offshore entity in India. Do I need to make it as a subsidiary entity or keep it as a separate entity?
Yeah, I think this we discussed during my session. So there are some advantages if you make it as a subsidiary or parent. Whether you'll get an advantage from immigration point of view or funds transfer point of view. You can transfer the funds freely if you have a parent subsidiary relationship. And at the same time, you need to follow certain transfer pricing regulations in both countries.
Okay, and I think even this question was answered during the stimulus topic, but I will still present the question. If you got stimulus money based off of your 2018 and 2019, but you ended up with higher income in 2020, then what is allowed to receive a stimulus check? Then do you get to keep the stimulus check, or do we need to return the stimulus check?
Can you repeat the question, Manu?
Sure, Ashley. The question is, if we got the stimulus money based off of 2018 and 2019 taxes, but you ended up with higher income in 2020, then what is allowed to receive a stimulus check? Then can we keep the stimulus check, or do we need to return the stimulus check because we got higher income in 2020?
So earlier there was a rule that the stimulus would be adjusted in the tax return, and then you'll end up paying it back. But now, if your 2020 return has not been filed and you received on the basis of 2019, right now there is no provision of returning it.
Okay, that's good. There's no need to return it.
Correct. But if you got less because of being higher in 2019 and lower in 2020, then you can definitely get the difference back. Right now, that's what the provision is. So yes.
And another question.
The US government wanted to fund the businesses and individuals, so they don't want to penalize. So that's the reason they have more flexibility on these rules.
Right.
That's good to hear, Satya and Ashley. And I'm taking another question from Ata YouTube channel. Balusu, what are your charges for opening an LLC? So please send us an email for any such questions, info@artaworld.org, and we'll be responding through our email. And then another question from Vasudha Garlapati. How do we report income from India, like rent, interest in US tax forms?
Yeah, so this is one of the area where a lot of individuals missing or non-compliant. So whoever residing in US, whether you are on H1 visa, green card, or citizenship, so whoever lives in US, they have to report in US tax return their worldwide income. So if you get a rental income from India, then you have to report it in US. But at the same time, it's just the reporting. There is no need. We don't say that, or we are not saying that there is a double taxation. So if you pay taxes in India, you can get the tax credit in US. So it's not a double taxation based on the India and US tax treaty, but for all compliance purposes and for all tomorrow, if we receive any notice from IRS in order to answer it properly, so we recommend to report it in US tax return, so that US authorities know that you have these revenues from India and you are reporting it. But at the same time, there is no double taxation.
Okay, and another question from mail to Aleti, the user mail to Aleti. I live in a township that does not have any city taxes and I work from home all year in 2020, but my employer deducted city taxes as if I worked from office. How can we claim city taxes paid in payroll?
So again, this is a specific question. My recommendation would be to contact your employer and get that rectified. So that would be the easier thing, or contact the city and check with them. So.
Thank you, Satya Garu and Ashleen, and audience. Any more questions? Please feel free. Send us an email to info@artaworld.org. We'll be more than happy to answer your questions. One last and final question, Satya Garu. What is? I think this question is about Roth IRA. What is a traditional IRA versus Roth IRA, and which one's the best for retirement funding?
Okay, so there are some differences. Again, it requires a detailed discussion, but just to give a broad level idea. So traditional IRA, you can contribute up to $6,000 and you can take a tax deduction in the year of contribution. Whereas if you contribute to Roth IRA, you'll not take deduction in the year of contribution. When you withdraw a traditional IRA, you are liable to pay tax on it. But whereas when you withdraw Roth IRA, there is no need to pay tax on it. These are the fundamental differences. But depending on the income limits and depending on the eligibility requirement, you need to choose whether you wanted to contribute to traditional IRA or Roth IRA.
And there's one more question in YouTube. So audience, as I said, any more questions, please send an email to the email that I mentioned, info@artaworld.org. And this will be one final question that I'll be taking up. So this question is from Ravi Dharanipati. If we have real estate in multiple states and multiple properties, do we need to create LLC for each state? What are the options?
Yes, certainly we would recommend to create LLCs in each state. Again, when you incorporate the LLC in the state, you will be protected under the state rules. And LLC is a limited liability company. Tomorrow, if there is any lawsuit filed against you by the tenant, for example, in one of the states, if you don't incorporate LLC in that state, or if you are operating all the properties under one LLC, then your all other LLCs will get affected. So in order to protect from liability point of view, it's always recommended to incorporate LLC in the state where you have the property.
Thank you so much, Satya and Ashleen, for such an informative session. And we are sure all our audience much appreciate the two of you for a well-presented and answered session right exactly at this peak tax season. So on behalf of American Telugu Association, ATA, and the entire board and the executive committee, especially President Bhunesh Bhujala Garu, thank you so much to both of you and the Chugg firm for presenting this wonderful, seamless webinar and making us understand all these complex tax terms which are otherwise not easy. And now I would like to invite Tata Executive Director Raghuvir Reddy Garu for presenting the vote of thanks.
Hello all, my name is Raghuvir Reddy, Executive Director of ATA. Andarki Namaskaram. It was a great session. Thank you all for making it a success. and this was very useful for all of us. I really thank Chuck CPA firm for coming forward and help ATA and our community at large. It means a lot. Special thanks to Satya Yerua CPA and Miss Ashlini Shai CPA. You both are wonderful. I really thank for your time and efforts and coming forward to help us. Thanks once again. I thank Ramakrishna Reddy, Joint Secretary, and Banu Reddy Garu for excellent moderation, Anil Bodhi Reddy Garu for technical support. Special thanks to TV5 and Mana TV CEO, Sridhar Chillar Garu for his valuable advice and broadcasting in TV5 International YouTube channel and Mana TV channel. Thanks to ATA special media team, social media team, I thank all wonderful audience for your cooperation, and I am sure this tax webinar is useful to all of you. Thanks to ATA President Bhunesh Garu and executive team for arranging this webinar. Thank you and have a great weekend.
Thank you so much, Raghuveer Garu. So there's another question. Somebody is asking, may I know if the recording is available? So yes, this video is available in our ATA YouTube channel and ATA Facebook page. You can definitely watch the video later. So thank you so much, one and all. Thank you so much, all the audience, for attending this tax webinar. And hopefully this webinar equipped you well with enough information for better tax planning strategies. So we'll be back again soon with another event. Until then, stay safe and happy tax filing. Thank you.
Thank you.